Right, guys, thanks everyone for being here. Hey everyone, hey Daniel, how you doing? Good to see you. Let me just let a few more people in. All right, so execution plan for 2024. This has come about as a result of having working with a few people and seeing that execution is really an issue in most businesses. Now, this is I've almost looked at well in excess of a couple of thousand businesses now, so I can speak with some authority here. And so I've been doing this thing every 2 weeks, thanks to Paul, who's on the call on our team. And he came up with a name for conversion. Every 2 weeks, basically, I just would jump on a call like this. It wasn't very heavily promoted, just one email. But a lot of good feedback came about. And so I decided to, this year, turn it into a much bigger sort of event, still every 2 weeks, but maybe make it weekly as well. So let's get the ball rolling here. All right, just bear with me. Okay. Right, so my best wishes for a bumper 2024. In the same way as you ended 2023, then today's conversion lab is for you, and especially if you're hoping for massive results this year. I just want to make sure that allow recording. All right, cool, no problem. Hey Josh, I've just turned the recording for you on, so feel free to record if you want to. There'll be a copy of this will be available as well. Right. So what's so special about this conversion lab? Okay, I've reviewed lots of funnels in many verticals. I see common mistakes. Now that's at the funnel level as well as the marketing hurdles that people have, and also fixing those hurdles provides some release and some growth, but not all the time. So one of the issues I'm finding is hey, my lender is not working. They fix the lender, and then you go for a few more weeks, and then now I can't spend any more than X dollars, and you go and fix that problem. And it seems to be that it's just you work enough to get the next problem, but never really stepping back and strategically looking at what the hell are you trying to do here, and then fixing it once and for all. So that essentially is, and so. And what you're going to find at some point, it's no longer a marketing problem that you're fixing now. You're fixing a operational issue, you're fixing an HR issue, you're fixing some other thing. So in the consulting work that I have been doing, I look at whole of business, so not just try and help with one small aspect of in terms of the lead hook side, or even or just funnels, but I look at everything. We look at cash flow, we look at financials, we look at and so my last thing we did was in helping people to exit, all right? So, or at least that's the framework to a metaphor to exit. So I'll cover that now. So the unpopular conjecture, that's mine, is marketing is really an unsolvable problem. Right? At some point through luck, testing, or consulting, you'll get that sorted. And you'll find something that works, unfortunately, without an appreciation for the other parts of the business. And I've seen, marketing, it kind of turns into a hammer to. And what you're going to find is that like you solve one issue, or you're a great media buyer, and that's your hammer now, and you want to solve every problem through that. And unfortunately, or another creative or something, right? So lessons from Exit SOS. So this has been the second month now with most of the people now. I actually thought we are going to solve this in 4 weeks, but the number of issues we're finding, or the depth of issues are required. We're going into the second month now, but I'm hoping that this is it. The second month is we should complete everybody and to be in a good place. So last year I released a one-on-one consulting thing called Exit SOS. We only pick 5 people, and I've been involved in business turnarounds for a good part of my life, and I want to get back into buying businesses that complement lead hook. So the strategy for me going forward is lead hook's great, but we want to bolt on other stuff. So one of the things we're looking at is, rather than internally developing the tech, maybe you can just acquire something outside. So one of the things I wanted to get is when you're buying, in every turnaround you're going to buy, there's always going to be while the tech is great, who's going to run it, and do we have a systemized way of scaling, much like you would have if you were acquiring a kind of almost like a private equity type company. So I'm building it internally now. So it's an internal sort of incubator for acquisitions for growth. And in order to do that, I wanted to make sure that I haven't missed anything. So I released a fairly cheap priced offer and said, I'll help I'll have businesses get to exit. And through that process, I'll document everything that we're going through. Thankfully, there are 5 different businesses of 5 different sizes and 5 different, totally different sets of issues. So it's turning out to be a very rich experience for me personally. And so I've decided to I'm sharing those lessons plus all the other stuff that I do in this little workshop today. So create a framework with working with a variety of businesses, who want to exit, and exit is just an excuse to create massive value. The point is that it's when you're moving towards an exit, it's never really about the exit. Yes, some people will actually exit, but not everybody. But in order to get to exit, you take a bunch of you do a bunch of stuff, and that gets you. That's what creates massive value, because without the pressure of saying I want to put this onto the market, you never really fix those things that you're supposed to fix. So everybody runs around with inefficiencies. And so that it's a great metaphor to fix things, actually. And that's what this is about. Oh, by the way, guys, if you have any questions, feel free to keep adding it into the chat. As you know, my calls are very interactive, and I go on any tangent that the question comes through. So please don't hesitate to ask. All right, so we've got people who are doing $500,000 to up to 10 mil per year. We've got a 1-person team to 10 to 12 people team with a large team of external VAs and providers. Right. So, but they're all in large verticals, debt, finance, insurance, cars, solar, those sort of things, B2B and B2C. All right. So the main focus is, and this is not necessarily people I'm working with, but just whenever I'm talking to anyone, because I do weekly calls, so I do talk to a lot of people. It's always like they're running in 5 different directions, and there's never really one central focus core that's pushing in one direction. It's almost like, oh, I want to do AI this now because some guru posted something about that, and so I asked ChatGPT to create an image for me. It came up with a pretty decent image of everybody's running after rabbits here. All right. So the truth is, bottlenecks grow with scale. Right. So what got you to 1 million is not what's going to get you to 5. What got you to 5 is not to get to 10. And every hurdle needs a different solution. And it's not always solvable with just more ads and creatives, which seems to be the basic way to solve most, market. Obviously, we're marketers, so we look at marketing as our hammer, not realizing that sometimes growing the team may solve the problem much faster, because you can't replicate yourself anymore beyond a certain stage. Right. So here are the 6 categories of wins that I've come across. So for number 1 is strategy. I'll spend quite a bit of time on that. Insights, which is tracking analytics, operations, finance, team, marketing, and then offers, copy, funnels, ads, media buying. I'm not going to cover too much on number 6 because almost everybody in this call comes from that background. So I won't cover that. All right. So growing a business where the returns grew to 60%. So this is a 60% return on invested capital. So I think we'd put 10 million in the business. We were making about 6 a year. At the end state, we started out, it was about 3%. So we went on 3 to 6, and that was one of the turnarounds where I was actually the architect of the turnaround. So I've got a lot of, and it took about 6 years to do that. Now, how did we do it? While we did have quite a bit of a marketing type investment, so we did launch products. There were a lot of technology investments in working capital and investment management and inventory management, because it was a consumer products business. We also trained HR. It was compulsory for everybody to go through X hours of HR training. We did exceptional market research. So what we did was we bought actually Nelson's retail scan data. This is data that's available from Nelson Consulting. If you're at the enterprise, you'll see companies where you can buy the retail scan data. So Walmart, for example, monetizes the retail data that we have. So when you go to the checkout and you're buying whatever the groceries we are, all the data is available for you to buy, and it gives you information on the categories, and you can see where the growth rates are and all that sort of stuff. So similarly to the market research you would do online, but this data, because it's picked up from large retail stores like your Walmart and Whole Foods and whatever else there is, it actually is very complete. There's not a lot of assumptions to make about how good the data is. It's pretty clean. And so you can really see where the markets are moving when you're looking at this data set across a 5 to 7 year period. You get to see patterns of what's going on. And so we use that patterns for our product launches, basically. And that's what I mean by, so market research, whether you're doing it for, at the retail level, large enterprise level, or even the online type stuff that most of you would be doing, you can't run away from it. And the better the market research data you have, the better the analysis or the better the conclusions you reach, because you have a much more complete understanding of what's actually happening in the world, right? So that's how we will turn the business around. 60% is unheard of in most businesses. I've usually, it's like printing money basically. All right. So, right. So the fundamental law of business is success follows a fat tail distribution. So a lot of things don't work and some things work really well. But really, and the average really doesn't get you anywhere. So the suboptimal bias we have is towards stuff that pays off today. Nobody wants to do like, hey, listen, I'm going to work for 5 years and somehow get my payoff then. Similarly, you know what? I'd rather take a pill to get six-pack abs than to, I don't know, do fast and go to the gym and all that sort of stuff for 12 months to get that same body, right? I mean, that's what we're all selling. All right. So, but it's a suboptimal bias, especially when it comes to things like where the payoffs are uncertain in the longer term, such as investments, business, and health. Right. So 6 months of testing. So he is someone that was in the finance space. They scaled to 200,000 leads a day. The reason why they stopped is because there was a lawsuit. They had to stop, but I think they were going to keep going. So now what's not apparent, because it's a very small graph where the scale is not quite right, is between this period and when they actually launched, they were tweaking and testing. Right now, I don't know too many people who are going to be testing ads, offers, and all sorts of stuff for 6 months to scale. But that's the kind of game they were willing to play. And so they dialed everything in, and then they launched and basically went to 200,000 leads a day. I believe that resulted in about close to $60 million worth of loans being closed in a single day, is what they were at the height of that funnel. All right. So anyway, I covered quite a bit of this in Finance SOS, and that's one of the things I want to keep referring to because some of you have done those things. Right. So the strategy. So what is strategy? It's the choices you make to maximize the odds of winning. And I'll sort of explain that in a bit more detail. By all means, yeah, thanks, Tommy. Please do ask any questions if something's not clear here. Right, so what business are you in and why? So it's a decision you're making about, here's why we're going to play this game, right? And here's how we're going to be better than everyone else at serving our segment of customers. Right. And you got to ask that. So in what way can I make this thing a little bit better, faster, quicker, cheaper, easier than the next person, is essentially what we're trying to do in everything that and it has to make sense to you, and it's for you. And I'll explain what this line here is probably the most important line when it comes to strategy, because what may make sense for me may not make sense for you. That doesn't mean the opportunity is bad. It just means that I'm not a good fit for it. And that's often missing when you're looking at the online opportunities. For example, my good friend Go's on the call here, right? He's brilliant affiliate marketing, right? But he's got 20 years behind him in doing that, in playing that game. Now, let's say I've never done that and I'm not really analytical, or I don't know the media buying side of the game too well. I'm more, get on the call and close people. Then me trying to fit that game means that I'm playing a losing game. Nothing wrong with affiliate marketing. It's just I'm not suited for it, or my capability and skill sets aren't suited for it. So it's a cross-section that you need to weigh up is what's really, really important, right? So only 8% of, so just to kind of share with you, a very small number of people really excel at this, right? And it can't be split tested because it relies on you bringing what you have to offer to change the odds of success to the table, which is why it's not, so you're looking at opportunities and how you can exploit is so it's the all action, no strategy, right? This is the typical internet marketer right here, is driving a bus to nowhere. The reason why I picked this image is because there was someone who bought a course from a guru. They spent well in excess of about 10-15 grand or something along those lines, and they'd been sold on how they can leave the internet lifestyle. And so they signed up to Lead Took a week or month or so, or 2 months, couple of months later. They somehow ran into that from some Facebook group, and asked him, I said, so what are you doing at the moment? And he said, oh, I'm trying to build this funnel. I said, no, that's great, but what were you doing before you did this? And he was a bus driver. And I said, okay, so I'm assuming you were doing it as a side hustle. And he said, no, I actually was a bus driver and COVID hit and I couldn't work in that space anymore, or whatever it was. So I'm doing this. And I said, so you telling me someone has sold you on somehow you're able to do this thing within a few short weeks, and literally you've come from outside the industry. So I canceled his account, and I advised him to get a refund if he could. And I basically asked him to go to Udemy and buy a $10 course on how to, learn basically, a little bit of the basics of the web. And yeah, that's right. You're just one funnel away. Um, and that exactly is sort of what happened. And I was a bit taken back through the experience. So it's almost like, OfferX is paying 200, let's go. That seems to be the common, my most common question is, and I know it's a newbie when they ask that, is hey, what's really doing well right now? And I'm like, okay, but do you have the skill set to go play that game? I mean, I can tell you that, solo is doing really well, but I know the guys who play solo, right? I mean, they know what they're doing. That's why they're playing solo. It's not for an amateur who's not comfortable, because the margins are thin and the spends are big. So like one of the guys I'm working with right now, they spend about $1.5 million a month with a 7% net margin. If you have a bad 3, 4, 5 days, you'll wipe out 2, 3 months of profit. And so it's not a game. Like it's serious stuff. And so unless you've built that in your DNA on being able to handle that kind of risk, don't play that game. You will get wiped out. So yeah, I did because there's no way I can help him. He's not my customer, right? So what offers can I run, or what's a good market? Like that's the other big question that you get, right? Assumes you've already made the optimal choices, but you haven't, because you haven't looked at it. Do you have the strength, the capability, and to play the game? And obviously, I think we've all been conned by this one. The money loves speed, right? At the point in the funnel where you're supposed to suspend your critical thinking and buy, except sometimes you need to take a step back, and money does not always love speed. So we've all been fed a lot of bullshit around just taking action, when the truth is that we're all optimizing for doing stuff, when sometimes we need to step back and say, well, what I'm about to do, does it actually make sense? And I think we've all done that. Yeah, speed does love your money, correct. Where we're too quick to go jump into stuff, and as a result, we dilute or take attention away from what was working. And I think everybody on the call, and myself included, is actually guilty of that, where you've got this nice little game going on, and you just realize, oh, if I just go and do this e-com thing, I go and do this other thing, and next thing you know, you're chasing 2 rabbits, and when you're chasing 2, you get none. This happened, just to share an example with you. There was an SEO company that called me up. They were great at SEO. They did about 10 mil a year in SEO, as in SEO consulting, helping clients rank. And they'd heard about pay per lead and all this sort of stuff, so they want to get into it. So in the first call we had, I said, "What do you guys do?" So we do SEO. I said, "Okay, great. So what's wrong with SEO?" They said nothing, and I said, "So then why do you want to do pay per lead?" They said, "Oh, because pay per lead's making money." And I said, "Yeah, it is for people who know how to do pay per lead. What do you know about pay per lead?" And they did not come with a strength of buying media in competitive niches like debt, solar, and all that sort of stuff. I said, "You'll get killed." I said, "I'll tell you what, why don't we just look at, pay per lead 3 weeks from now? Let's go look at SEO and see whether we can optimize what you're currently doing in SEO, maybe a new offer, maybe a new way to grow." And so what we did was we got all the customer data down. We downloaded it. We said, okay, who's doing what niches are you selling it? And what they uncovered was that 60 or 70% of their revenue comes from the legal field. I said, okay, why don't you just double down on legal then? Because you seem to obviously have a good win. You got lots of customers, which you get a lot of testimonials. And they did that. And literally they won the SEM Rush Agency Award of the Year in the legal field. Right. And the guy even posted and he tagged me in the post saying, it wasn't for Nick setting us in the right direction, we probably would have gone down the wrong way. And that's a good example of strategy, is looking at your strengths and double downing on those, because it'll be far cheaper, faster, and easier for you to win that game than for you to run into something else that you don't have expertise in. So, for example, there's a lot of funnels, and in fact, I think I saw Nick's login here. All right, now maybe he logged out. All right, so Nick, who was on the call, is a very technical marketer, like lots of APIs and all that kind of stuff. So his funnels really has a lot of technical stuff in it. And that's not a game I would recommend you play unless you have his technical skills. right? So similarly, you all have your strengths, and you wanna work to that, and is what strategy is all about, right? So you start from your strengths, and that's from yourself or your business, your existing skills, temperament, network, and the capability that you bring to the table, right? And also be aware of the weaknesses. Like if you hate working with people, then don't go and find a business that's very people centric, or go and find someone who loves people and get them to join you as a partner, right? That's kind of like what I mean here. What markets do you have an advantage in? Let's say you come from the car space. Let's say you come from the debt space, or you come from some existing space, right? This is you wanna is the overlap of your strengths and the opportunities that you see in the market, and that is exactly where you need to bring it. All right. So example is a media buyer with a good relationship with an ex-employer, right? So there's no need for credibility. You've already got the network. Yeah. Right. So better terms, right? You can ask for early payment, so you have less cash flow constraints because you're piggybacking off an existing relationship. Prior market knowledge, know-how, and how funnels work in that space makes it easy for you to get in. The compensation models, what the current prices are that leads are selling at, what the cost should be, right? So it makes no sense for you to just start running after a new market that you have no expertise in, when the one that you have got experience in is something as big as debt or finance or personal injury or one of those things. Those are bottomless pits. So if you've already gained a relationship and expertise in those space, why would you want to go and chase something else? Just double down on that, right? So she's not getting into SEO, even though VSL promises easy riches that a lot of people have. All right. So understanding where you can create value, right? So the compensation model is how you get paid. Business model is how the business operates. It's important to be aware of both things. So because they require different levels of skills, competence, and capability. I'll go into that very shortly in the next few slides. So expertise in one does not guarantee success in the other, right? So just because I was able to write great VSLs doesn't mean tomorrow I can start doing, PPL in solar. They're two different spaces, different expertise, different levels of expertise, different appreciation for risk, right? So risk and reward. So first one is you pay for service, right? That's a classic agency model. It's the least risk for the agency. Yeah, your clients might leave, but you don't have much on the line. You get paid percentage of ad spend. Next one comes pay per lead. You're taking quite a bit on. You build your own funnel, you spend your own money. Then comes pay per call, then comes pay per appointment. Then you got like pay per client, which is the assigned deal. And then you got rev share, and you got profit share, and then you got equity. Right? This is like where you get a percentage of the business for helping to build it. Now, each one of these has a different level of skill set to play at, and the risk levels are different. Equity, obviously, you have the highest risk because you're taking percentage of the company, and the company may not do anything, and so you'll actually make nothing. Pay for service is risk for the agency, and while the client may leave if you don't perform, the point is it's not like you have any money on the line. You're spending somebody else's money. You're getting a paid a percentage of that. So it's important to understand: are you comfortable at the risk level that is required to play the game, and how will you be compensated properly, and do you have the skill set to play that? This one here, you just do media buying. This one, you build a whole funnel. That two separate skill sets. If you're doing pay per call, right? Okay, you got to start dealing with Ringbar and CallRail and all the other stuff. They're not really the easiest platforms to work with. Do you have the time, energy to go deal with that stuff? Right? Paper sign deal. Yeah, this is the most, you've taken the most amount of risk here because you're actually closing the deal and then getting a fat commission for closing the deal. But now you got to know not just running traffic, but you got to know how to nurture them, to bring them on a call or a webinar or a VSL or whatever, and then close them. Right? That's a totally different skill set to if you were just doing that. So it's important not to just look at somebody's numbers and say, oh yeah, cool, he's making a whole bunch of money, so therefore I can do the same, because your skills may not be the same for you to be able to replicate that. Right. So paper X, which is any one of these markets, right? It's a terrible value capture for lead gens if the value follows a nonlinear distribution. I'll explain what that means here. Example, wealth management. So if you're in wealth management, you can actually get because you get paid on AUM, right? As in your client gets paid under AUM, which is assets under management. So if your lead is someone who has $10 million, you're going to get paid, whatever, $100 or $200 or $300 or whatever it is that you're going to get paid for the lead. But look at the value that the client is getting, right? So whenever you're having a flat fee kind of a compensation model, you want to make sure that the client level is largely stagnant, as in the value that's coming out of the deal is also reasonably stagnant. So, for example, let's say if you're doing payday loans or something, it's only going to be 20 grand, around about 5 to 25, 30 grand. It's never going to be a $10 transaction. And so for that reason, if you are doing this lopsided stuff, then you have to move to a percentage of the value that's being generated. So the deal becomes a bit more complicated, right? So and I've had people who've done wealth management and litigation and those sort of things where they're getting a flat fee, and a lot of CPA networks will give you a flat fee here, but you're losing out, as in you as a lead gen is losing out on that massive payday if you're getting if the value of the leads that's coming through is so volatile. So let's say if you're getting 100 $1,000 leads and then one $10 million one, well, that $10 million one should be paying for thousands of the 1,000 one, right? So be very careful in your market selection and the compensation model that has to match with the market with the market you've selected, right? Hope that makes sense, guys. Please show me a question, a throw of hands, thumbs up, thumbs down. All good so far? Or a comment? Yep. Okay, cool. Awesome. Thank you, Tommy. All right. Okay, beauty. All right. Okay, so from strategy execution, the guru version is start a $50 campaign, you'll be making money by next Tuesday. The reality is depending on what you bring to the table. Now that works for someone if you've already got the requisite skill set. So let's say, for example, if you are going to go live on a paper lead funnel, let's just pick let's say debt refi, right? So you need to know funnel building, you need to know marketing automations, you need to know media buying, you need to know how to build landing pages, you need to know how to write copy, and you need to do tracking analytics, server side, client side, and you can put it all together, right? So that skill set would have come from somewhere. So perhaps previously you've invested a whole bunch of money in your skill sets, or maybe you work for someone and they trained you to do all that sort of stuff. So in your case, your J curve will compress, right? That's a J curve, because you can go from the idea, the strategy, and literally, in a day or 2 or 3 or whatever it is, you can get it done, and you can literally start running your traffic because you have good awareness about what that is. Now that J curve is going to is going to depend on it's going to be different for everybody, because we're all entering the space or whatever the problem you're trying to solve, or whatever marketing or the business you want to get into, with different skill sets. And you need to be ready for this, because this is where you're going below negative. This is where you're investing in either yourself to learn the capability, hiring consultants so that you're buying capability, or literally you're burning money to learn about the market, right? And that there's no way around this one. Okay, so there's a question here. If you work on rev share model, you take the risk, but when should you expect to get paid? Good question. The best models that I've seen, where they have like a 2-step, you get paid some upfront, and then you get paid a residual later. So the upfront one largely covers your cost. So as soon as a deal closes or a lead gets sent, you get paid a per lead fee, and then when the transaction closes, you get the transaction fee less what they paid you upfront. So the upfront payment is like a rebate to the back end. Those ones I feel are most fair, because it's compensating for your time, and the fact that they're putting some money, there's some skin in the game. They are required to work the lead now to recoup it. If you just do back end, you'll and I'm not going to say that that's for everybody. There's no motivation to actually do something with the lead. They might just say, oh, well, what do I care? Shahar just send me the leads. Well, I don't have to do anything because I don't have to pay him until something happens, and I'll just tell him the leads are shit. And that's one way to sort of. I'm assuming let's imagine that you have a third-party relationship here, and not someone you personally know. So that's why I think no matter what deal you structure, you want to make them have some skin in the game. Does that answer the question? Just to give me a thumbs up or something if that does. All right. So that's the J curve, and you want to be aware of that, and that's part of the cash flow planning that you want to do. Right. Now, resource planning Hello, fantasy, meet reality, right? That's we're gonna be making real right now. Okay, so revenue growth, okay, awesome. Where is the growth gonna come from? Where's the revenue gonna come from? I'm assuming you've got an existing business and you're planning some growth for this year, right? What verticals and markets are you gonna go into, right? Where will this growth come from? So get specific about where this is gonna come from. I'll share a format of a spreadsheet shortly, right? The level of newness. Right. Now, this is super important. So are you working with same client, same vertical, same media? Or are you going to go towards new clients, new vertical, new media? The other two choices you have, that's the spectrum. On one side, it's all the same, so nice and easy. On the other side, everything's new, right? And so depending on which side you're going to go on, your J curve is going to come into play here. Obviously, if I'm in the same, then my J curve is quite short. If it's new client, new vertical, new media, then my J curve is obviously going to be much deeper and bigger because I have learning cost to play the game, right? But you want to do is you want to capitalize on the moat that you have in this case. So try and see if what you're currently doing, if there's some way to do more of it, and that's usually the best approach, and not to start chasing a rabbit down a hole that you have not don't have awareness. And the other reason is that your capability matches to what you have currently a moat around. So let's say if you're really good at affiliate marketing and you know Facebook ads and Google ads, well, then doing more of that is probably going to be a better outcome than to start wanting to sign up clients in a niche or in running TikTok ads that you're experiencing, or you start doing offline ads or whatever the heck it is. And so just making sure. And so that's not to say that you don't want to. So the purpose of today is not to tell you where to go, but to stretch you to make you see that this is the spectrum in which you operate. So it's important that whatever choices you make, be aware of what the consequence is. If you go for new, yes, blue ocean, perhaps, but also a lot of pain, all right? And be aware of that. Yes, so basically where you have a natural advantage and edge of what you do. So let's say if you're a great media buyer of TikTok, stick to TikTok for your next project and not start doing YouTube ads or something else that you don't have expertise in. All right, so new talent, all right, and capability, right? So obviously, if it's new, then you're gonna have to go and either hire someone or go and get new learnings, because this is often not appreciated, not spoken about in most of the kind of guru type stuff that they're telling you that you're gonna make a lot of money in 2 days. Is that there's a massive amount of new learning that has to take place, and if you're not and if that new learning is not congruent or in the style that you like to learn in, it's going to be a long, hard road to get there. So being aware of that means that you're not going in blind. All right. So once again, the purpose of this is not to tell you what you should or should not be doing, but just realize that just looking at the outcome of the payday is not good enough. You also got to look at, do you have the capability to go get the payday, and your skill sets and your may be a mismatch. If it's a mismatch, then you're going to be investing in yourself. Yeah, absolutely. Yeah, Mohammed, yeah, absolutely. Yeah. Pain and suffering. That's the J curve right there. Time, energy, money. Right. And bandwidth. Okay, this is an important one. If you're already working, 14 hours a day, then like that bandwidth has to come from somewhere. You have to cut something out. Right. So like most of us, or at least most people that I've run into, they already are doing quite a lot. And so the bandwidth part is the problem. So if you have a bandwidth problem, then you want to stick to the sameness and not necessarily go in the newness side of the funnel, because you just don't have the time and energy to go build that new learning capability that is needed. So be aware of that. Obviously, cash flow. The more new, the more cash you're going to burn. And then obviously the dreaded J curve of growth. And then lastly, is this going to return any money to you? So if you're planning a new venture, what do the numbers look like? Okay, so what is the current paydays? What am I looking at the expected cost? Sometimes you won't know this, obviously, if it's a new market. Now you may ask in a Facebook group and someone might give you some information. It may be totally wrong. And so at some point you're going to have to run some traffic to learn what are my numbers looking like. Now, this is where you can go to a CPN affiliate network and use that as a way to quickly learn. And that's a perfectly good strategy. So let's say you want to go into solar, go and pick up a solar campaign from a CPA network, run that to get your cost side done, because you know that on the revenue side, you can easily get double, triple that if you go direct to a client. But now you've got the evidence, you've got the runs on the board, so to speak, to use a cricket analogy, a cricket metaphor, and you can take that to whoever you want to outreach to, or where you're going to get a client, and say, listen, this is the kind of numbers I'm getting, so you can obviously sell. I don't recommend that you go and just take someone's money in a market you know nothing about. In fact, that bus example that I shared earlier, that person was in the situation. I think they were able to sell someone, and they got a check for about $5,000 or $10,000 to supply leads. And the guy calls me in a panic basically and says, "Hey, I need to deliver these leads by next week." And if you're not from the industry, good luck. So I said, I think you're better off refunding the money, because there's about probability of about 1% or less than that you're going to be able to do that. Right. So does it make sense on paper? Right. And now this is where a lot of people go wrong, where they end up picking too small a market. Right. So let's say they look at some ClickBank stuff and they go, oh, I'm going to do $500,000 here, and they go pick a market, I don't know, underwater kickboxing or something along those lines, and there's just no capacity. The other problem with small markets, and this is not to suggest now you can go learn in small markets, okay? So this is not an advice to once again, to avoid that. But if you want to scale, you just need to pick a big market. There's no way around that particular constraint. If you want to get to 10 mil, you just have to pick a big market. There's just not enough money in, I don't know, numerology on ClickBank. There's just not, right? Because the biggest guy in that space does about 3 mil a year. So, and he's been doing it for 20 years now. And you want to go beat him, good luck, right? So you're going to be making $500,000 or less. And if your goal is to exit out, then you pick a business where there's lots of buyers and sellers. So on that, I will deviate a bit and share a bit about choosing the right type of business to get into. So firstly, you want to go into a business where the ecosystem is big if you plan on exiting. So if I built a reasonably good solar funnel, and let's say, you're spending $1 million a month, that has value to somebody. Now, it could be value to another media buyer, could be value to another agency, could be value to, solar installers, could be value to an aggregator that's sitting in the middle. It's a very rich and deep ecosystem where lots of people are buying and selling businesses and lots of deals going on. So if you were to create something of value, an asset, you can easily get it liquidated. To create an asset in a space like underwater kickboxing, there's just you. And yes, while it's good cash flow, you'll never get that exit. So if you are going to go into a smaller market where you are going to make some good cash flow, then you need to make sure that you divert that cash flow into some other asset. This is going into investments here. You want to invest that money elsewhere. So at some point the day you want to leave, you might just have to shut it down. But now you've already built an asset base outside of that particular active asset that you had that was generating cash flow, and now you've got, let's say, 5 houses or whatever it be, and that's going to kind of fund you and feed you for the rest of your life, right? Because there's no exit there. So you want to be very careful. If you get into a business that's only cash without exit, then you need to ensure that you've planned for that eventuality, because one day that funnel will run out. All right. Any questions on this? This covers the strategy side. Cool. Right. We'll go to finance now. Okay. Oftentimes you'll be in vertical 1, and you'll decide that you want to get into vertical 2. Because of the J curve, you want to make sure that you structure your financials so you don't make rash decisions. Now, here's what I mean by that. We covered this in Finance SOS in a lot of detail, so I'll quickly go over it here. If you are going to be in multiple market segments and or multiple verticals, then you want to ensure that your P&L, whether it be Xero, QuickBooks, whatever you're using, is split up in such a way where the costs are being tracked with a lot of detail and granular detail, rather than being lumped into one kind of final number at the end. The reason for that is because if you've got something that's making you a reasonable amount of money, so let's say, for example, we've got debt for mums here, and I want to get into, and I've just opened up, a new funnel, life insurance and solar. So solar in Florida and life insurance for families. and I'm investing all this money to get this thing off the ground now, and so I'm incurring losses, and I intend to do that. If you don't have these sort of splits in place, and you're not aware that this is actually what's going on, you can actually end up thinking like, oh my God, I'm actually losing all this money, but you're not. Your primary market is actually still working really well. And this is the required investment or the J curve that's needed for you to get these things off the ground. That's perfectly fine. It's perfectly okay and quite normal, right? You will make losses when you first start anything. So having the splits then allows you to see what's actually going on. Now, the other reason for doing it is, what if tomorrow you get an offer where someone has run into your debt funnel and they want to acquire it? So you have your nice numbers here, you present these numbers to him, and he or she may want to buy their debt. Now, as a result, whenever you're doing a multi-vertical business, so you got, think of putting them either in separate companies, kind of deviating off topic here a little bit, and you definitely want to create different your business managers and for each vertical. So if I go into debt, I'll have a different BM to life insurance and solar, because the day you want to exit, you want to give that BM away and not be stuck with, oh crap, my account is shoved into one place, and now you can't exit because the person has to recreate a new account, and you're losing a lot of juice whenever you create something new, especially such on Facebook. Right. So being aware of that allows you to ensure that you plan yourself really well, because that exit will come at some point, and or not, or whatever it is, but it doesn't take much to go and organize yourself in this way. Right. Hope that makes sense. Any questions on this? Nope. All right, cool. All right. Customer level analytics has to be segment centric. All right. So what I mean by that is, I'm going to go back to this example here. Is there are market segments in your funnel that are actually making you money, and there are market segments in your funnel that are giving you volume. And one may be volume at less profitability, and some may be highly profitable. So if you're not tracking what the P&L at the market segment level, and we do this with with the guys I'm doing consulting work with, we'll dump all the data into Google Sheets. We'll do a VLOOKUP, we'll bring all the revenue numbers in, and then we'll do a pivot table, and we'll try and understand which market segments are actually making you money. And it's often quite fascinating. You're going to find this like one sliver of the market that's giving you like 80% of your revenue. And meanwhile, you have 80% of the market that's actually not making you money. But in the aggregate, when you look at everybody, you're like, okay, well, I'm spending, $500,000 and I'm making, 200,000 on it. But when you look at the data, you'll realize that you could actually really cut out a lot of fat, your ad spend, and still keep the same amount of revenue. But you can't do that unless you're tracking the data properly, right? That's going to be our next topic, which is tracking and analytics. So because of the lumpiness, so without segmental P&L, you'll be subsidizing unprofitable market segments and not know it that you're doing that, right? So having this data approach is super important, because what happens, it just means scaling becomes easier, because your every dollar is bringing many more dollars back than to have a whole bunch of dollars that you don't know are not bringing any friends back. And as a result, you're growing slowly now because you maybe you have a 30% margin when you could have had a 300% or 300% ROI when starting out a campaign. Thanks. Yeah, thanks, Jivko. All right, so I'll be sharing something very special for you guys. So you're on the call, so don't buy anything yet. All right, so only one metric, and it's 8 components that you need to track. And I covered this in a lot of detail in Finance SOS, which is this diagram over here. If you ever want to run a business, all we want to look at is our return on equity, and it's comprised of 1, 2, 3, 4, 5, 6, 7, 8, basically like eight numbers. You track those 8 numbers, and you basically have tracked everything you ever want to have about the business. And we even broke down a balance sheet and P&L cash flow statement of actually an agency to work out how they could turn their business around, right? So once again, don't have time today to do a deep dive into this stuff, but that's all you want to do when you're looking at running your business. This gives you good visibility as to what's actually happening in the business. Right, now the only metric that combines all others, that is your return on capital, return on equity. Okay, so let's have a look at, so what I'm trying to show in this example here is, let's say, because a lot of people tell you, track LTV, and I'm not saying don't do it, but it's not the most important number. LTV, yes, I know every guru tries to tell you LTVs. No, the most important number is return on your capital. You've put in $1 million, what are you getting out of it? That's it, plain and simple. Now, if you have a low LTV business, it'll show up as a low return on capital. You got a high LTV business, it'll show up as a high one. Why? Because your marketing costs will be lower to run a high LTV business than versus a low LTV business. It all washes out in return on capital, no matter which way you want to slice the cake here. So this is the only number, because the point is that if you're not doing any of this, to go from tracking nothing to tracking 50 numbers, you won't do that, right? But if I say, hey, listen, you're not tracking anything, by looking at the ads manager, that's not tracking, right? That's just looking at the ads manager. If you're not doing anything, just look at this one number, right? That's it, return on capital. If you've taken care of this, I think you're better than 95% of businesses out there, because I've yet to see anybody tracking this number in the online world anyway. All right. So marketing metrics layer up into financial metrics, and all metrics layer up and at some point through whatever pathway washes up in your return on capital. So on this note, I'll explain to you what we do inside LeadsHook. So inside LeadsHook, we've got a 35% return on capital hurdle. So if I'm not making that, then I shouldn't be in business, essentially. And what we do is we translate that into a number of users who are paying us recurring revenue, right? And so there you go. I've got a financial metric. It breaks it down into my marketing metric, and then layers up to the number of users that I need that are going to flow into this, right? And that's just a quick example that this is not some airy-fairy, corporate stuff. This is exactly how you want to work, because what this does, this ensures that your business has value, which means tomorrow, if you want to sell it or whatever, you can sell it. The other reason for doing this is because if you ever want to sell this thing, if you don't have this stuff in place, it's easily 6 to 9 months of pain and suffering to get this in order. This information is not just happen overnight. So you've actually destroyed value in your business. Now, in the Finance SOS course, we had there were a couple of guys who've actually bought and sold a few businesses, and one of them shared the story where, in order to get this stuff in place so that they could sell, they actually reduced their profitability because the focus of the management team was taken away from running the business to getting all this stuff organized for the sale. And as a result, they dropped their profitability and in turn ended up getting a lower valuation. So being on top of this stuff is super important. All right. If there's no questions, I'll move on. Okay, how most businesses are overpaying for their leads because their tracking sucks. I think there's a few good people on the call, so maybe not you guys, but most of the world out there. Right now, this was a very expensive mistake. I know someone right now who's just sold a business. Their revenue about 1.5 mil. They had EBITDA about 500,000. They got paid 3.5 times earnings, so they got about 1.75. Now, as part of the sales process, they decided to do all this stuff, fix everything up. One of the things they fixed was their tracking. And I've been telling them for 5 years, go fix your tracking. Go fix your tracking. They finally fixed the tracking, and he calls me up and he says, I can't believe that I got a 30 to 40% reduction in my lead cost. And I've already signed the contract. So had he fixed that tracking earlier, as in maybe a year earlier, or heaven forbid, 5 years ago, he would have gotten 2.4 million at the same multiple instead of 1.75 million. So by not having tracking in place and being quite lazy about it, he literally threw away 700 grand. Plus, let's assume that that's how much the benefit is every year. You can, in 5 years, you multiply that. That's almost like a $1.8 million loss. Now it'd be actually more than that, because when you have that kind of money available to you in the prior years, you would have done something else with it. You would have grown the traffic a bit more. You would have grown the customer base a bit more. You perhaps would have invested in more technology. You may have, whatever, because that money would not be stagnant, right? Obviously, it would get reinvested to make more. So that's a very, very expensive mistake for not fixing your tracking. What I'm talking about here is you want to have your client side and your service side and throughout every node and every page on your funnel, because there's so many remarketing opportunities available to you that most people aren't on doing that. Yeah, oh yeah, because he added in client side, server side, finally added in enhanced tracking in Google Ads, and all of a sudden Google and Facebook both started rewarding him with a 30-40% discount because it's a quality of data that goes back to the ad network that allows them to send you the right kind of traffic. And so if you're just going to have a client side conversion one event sitting there, you miss out on a lot. Does that make sense? So if client side, server side with deduplication. All right, cool. No problem. All right, so we covered that in tracking SOS. Right, business process maps. Okay, this is where you're like, hey man, I'll get to this one day. this is that slide. Okay, don't do that. Please don't do that. All right, so we recently had someone who left our team. No, it's tracking. It's tracking in general across the board. In fact, I'll share with you what we covered in that, Jason. You'll find that quite interesting. Yeah, we covered all kinds of tracking with Leads components inside it. So yeah, but it was largely related to generic tracking, nothing to do with Leads. And none of these training programs are Leads centric actually. Yeah, they're all generic. All right, so here's how Leads accounting system looks like. Right now, you might think, yeah, you know what? We just charge a bunch of credit cards. You just pay a bunch of people. It can't be that hard. It is. And this is how things get as you grow, and things get complex along the way. And if you're not documenting it, it becomes a nightmare. So for example, we have a bookkeeper that charges us, I think, about $300 a month or $200 a month. And why does he charge us so little? Is because as soon as he joined us, he got access to this diagram. He knew exactly where what was traveling. He knew what recs were missing. He knew what the reconciliations to be done were, and all that sort of stuff. Now we have these diagrams across the entire board. We've got it on our onboarding side. We've got it on our marketing side. We've got it on our if you're leaving LeadsHook, we have a funnel for that. All sorts of stuff. We've got correct, yeah. So it keeps you tame. It also is a training document. The thing is, at some point, your business is going to become so complex that you don't remember things. Also, so let me just show you what happens, right? So you're mapping out your business. It clears your head. I don't remember everything, right? It becomes a training doc. You can easily get somebody else to do it, as somebody else to join you, I should say. So, and they have a training doc available. You stop relearning everything all over again. I mean, how many times have you done that? I mean, I do it all the time because there's something that we do once a year. I think we get this annual invoice for something, and I can never freaking work out where that invoice is on their platform. It's not like you got to click like five clicks to get somewhere. And so every year you go and you spend half an hour trying to find that button, right? So if you document it, this is these just go here, click this, click this, click this. You'll never have to redo it, but not just that, you can give it to somebody else. And here's why you really want to do it. The agents are here. We've been playing around with some agents that are automating quite a bit of what we do. You cannot get an agent to do anything unless you've mapped out what the hell you want it to do, right? So this is going to be a needle mover in 2024, is you're deploying stuff to automate a lot of this back-end processing type stuff. And even front-end marketing, for example, an agent to create videos for you. I've been playing around with that at the moment, actually. YouTube Shorts, 100% AI, right? It's a little bit codey and stuff, so it's not quite ready for general production or for human consumption, I should say. But you Josh knows. All right. Okay. And so you can't develop agents without this. You just need that. So all of a sudden you're like, I'll leave it till tomorrow. You just need that if you want to be able to build agents properly, right? So make sure you start doing this. This is no longer hey, I'll do it some point later. But here's the other reason, is you can really see where your business is leaking money. You'd be like, hang on a second, what's that employee doing? Why is he there? All right, and that sort of thing. All right, so all right, now comes the team part. You hire for attitude, but you train for skill. I've hired in excess of 1,000 people now, and so that to me has stood the test of time. You do want to hire for attitude and you train for skill. you fire fast even within hours. So we had a developer join recently, really hard to work with. So I made the call within, and it took us. We spent quite a bit of money to bring him in, but we let him go within 3 hours actually, because it just wasn't the right fit. All right, so make it hard to get in, and a very slippery slope to get out. So if someone's not a good fit, take care of yeah, kind of like don't tolerate that, because if you tolerate mistakes, so sorry, you can tolerate mistakes because obviously we all make mistakes, but you should never tolerate incompetence, laziness, or apathy, right? And that's or someone who may not be a good fit. Right now, how do you recruit at scale? All right. Okay, we covered that in Finance SOS. So what you do is, and I'll cover this. There's a lot of detail we've gone that we've covered this. So in the course, which you can get access to. So capability required now. In the future, you have your job description. You do an auditioning plan, which is what are you going to make them do? You do the job ad. You make a filtering DT. So this way you use Leadshook actually, and you send them to Leadshook first to filter them, and you use basically a decision node, and you kick people out that are not a good fit. And so what happens is only 3 or 4 people pop out the other side. You may interview them, a short call. You have your second round of testing. You give them the week 1 plan. On week 1 when they join, what do you want them to do? And then you're going to hire 2 or 3 people. And you might say, well, I only need 1. Yeah, but you still hire 2 or 3. What's going to happen is you're going to find very soon, within a week or 2, that 2 out of the 3 were really not worth hiring, or they were not so good. So then comes the onboarding part, comes a bit later. You hire people, you pay them, and so what happens there is then they're not like full-time employees, right? You say, hey, do this task, it should take you 2 hours, and that's it. After 2 hours, report back. So they do 1 task. You wait people out at that level. Then you make them do a second task, a little bit more involved. You maybe give them 3 hours. After 3 hours, review. So what happens is by the time you weed them down, you could actually end up it's a very efficient way of hiring, where you don't even interview, you don't even care. You just make them go through your tests, and whoever doesn't perform, you just keep kicking them out. It's far cheaper to hire this way than to go through this interview process, get 1 person, you find out is a dud, and now you're going to go back and redo the whole thing again. Just hire 5. The most we've hired at any one time is about 12. There was one time that I hired 12 people, and I had a 15-step process to weed them out. By the end, you have like 2 people remaining. So, and usually if you hire 10, 5 won't even turn up for the first test. That leaves you 5, so you don't pay anything for the 5. The other 5, they will go through 1 or 2 rounds, and then they'll drop out, and then you have 1 person who gets to the end. All right. Okay, you could repurpose this hiring SOP. Yeah, exactly. Yeah. Swipe right, Leadshook style. All right. ChatGPT, yeah, everybody wants to go there. All right, cool. Okay, now this is something new, which I'll be sharing with in a lot of detail, which is the onboarding and the team management SOP. There's a whole process involved where you set the infrastructure to do your team at scale, right? All right, so tech. Looking at page speed, uptime, scalable automations. So just by shoving things to Zapier is not going to be scalable, right? Sometimes at scale, it's going to break. So you got to be aware of that. You set up of different infrastructure, the automations, you increase revenue automations, you increase longevity automations. The complex thinking, unfortunately, leaves a lot of money on the table. The complexity required sometimes leaves and people want to go for simple solutions. And so I recognize that when we did tracking SOS. So for that, I made a course where we think through the problem before we solve it. And there's a step-by-step process, which we call the Techie SOS, where we present a problem and say, okay, we want to do split testing. How would you set it up if there was no app? And we go through the code using ChatGPT, and we build a server-side app and a client-side app all through ChatGPT. All right. And I share that in that course. How do you increase page speed? That's my second case study. I'm going to be doing another case study very soon on automations. Right. So that is covered in Techie. All of this increases the valuation of your business. For most businesses, maximize return on capital, or this covered this in Finance SOS called EVA, which is economic value added. Automatically increases the value of the business. That is the main point where we want to get to. So let's say you have an investment of $1 million. Your required return is 30%. The financial levers show where you need to make the adjustments, and your current return is 15%. As a result, too much capital used to generate revenue, or the wrong type of capital used, as in you should have used debt when you used equity, or vice versa. Your business is bloated, which is a very common problem. You eliminate spend costs because of the analytics that you want to learn from the analytics, right? And that kind of is, so you essentially do a case study on your own business where you say, this is the required return that I want, and you break it down into all the pieces. All right. So introducing Growth SOS. This is something that it's popped up. Listen, it's actually a free course, but I'll show you how to get it. Right? And some of you won't pay anything at all. Exit SOS is 10K plus. It relies on in-depth material that we covered in techie, tracking, and finance. So because as we go through that, I'm not going to go back and saying, hey, listen, go and do server side, go and do this. We'll rely on the previously shared information. So it allows me to reference the underlying material and the various bonuses that we covered, and any new bonuses that are required along the way. And otherwise, it would become an MBA program if you have to teach all of that plus the growth part in the one course. That's the reason why we've done those foundational stuff first before we go into this. So don't be the bus driver, and be strategic about the opportunity that you pick. The side benefit is already creating a business that appeals to buyers. So that's the whole goal. All right, so this is the planning sheet that we go through. Anyone on the call who's doing exit with me, you already got this. So, and covers the 7-8 areas of every business that you'll ever need. There's only about 6 growth areas that every business will cover. We go through that. We go through the different marketing channels, and we build out the entire spreadsheet basically along the way. And we cover the things that are needed, and we rely on the previous things that we've done for you to go execute that. All right, the investment is a live course, 6 weeks, a real mastermind level training without the real mastermind price, weekly Q&A. Anyone who's done a Q&A with me knows I don't move until you say, yeah, I'm done. And we've gone up to 3 hours sometimes to answer your questions. All right. And you get this for free with techie, tracking, and the SOS bundle. So anyone who's got this, guys, you get the course for free. All right. So there's nothing for you to buy today. Anyone who's bought just one, plus we have the detailed execution training in their Facebook groups where I answer questions. Anyone who's bought a bundle gets it for free. So you'll get an email very shortly with a special coupon, put it in 100% off, right? Well, there's nothing pay anyway, since you already got it. And the bundle, which is this bundle here, is currently discounted, okay? So heavily discounted. Get that, you get growth for free. So in the growth side, what we're going to cover is it's $299, which has been selling quite well. Go and grab that. If you don't have that, you get all 3. And that's it. So I'll just put the link in the thing here. Those of you interested, get the bundle on the right. You get all 3 plus growth. And so what I'll be doing is the training starts on the 1st of Feb. We have 4 to 6 weeks, but if need be, will extend it. And with all of my live courses, I never repeat them because I get bored of the courses that I teach. So yeah, so anyone interested, go and grab that. I'll put a link in. Now here's what we do in those 2 courses. So just to Jason, just to answer your question on tracking, we covered everything about how to think about tracking, how to use ChatGPT to help you build your JavaScript events, and then what is the universal pattern of tracking, and then we looked at all the various ones. So we looked at Facebook, TikTok, Bing, Pinterest, Outbrain, Reddit, Taboola, Quora, Ringba, and then we looked at all the server-side stuff as well. On the finance side, we looked at everything from business valuations, investments, your personal finance. You build a personal balance sheet. We go through the links between all the different types of things. We look at business process mapping, ROI, the financial analysis, and then we analyze a real agency. We broke down their financials and what they can do, where valuations come from, unit economics, and a whole bunch of stuff around the finance stuff was covered as well. And then a whole bunch of bonuses that were given as well. And then comes Techie, where we went through and we looked at these are case studies that we do. So the problem is how do you build a split tester? And we go through and we build a split tester. And how do you optimize your page speed? We went and we did that. Right. So that, in a nutshell, it's sort of the offer. If there's any questions that you have, please let me know. This is really just there's a lot of value to be gained from getting yourself organized for growth. Unfortunately, I could never teach that because it requires so much underlying stuff. Thankfully, these other courses cover a good chunk of the underlying material, which means we can fly through just the growth part and saying, listen, this is where you'll go and do module 5 from finance and go and do ABC. That's the action step. For this one here, you go and do this. So it allows me to sort of piggyback off this. And that's why I'm doing it for free. Anybody who grabs that can get the other stuff for free. I'll just share the link for anyone's interested. Otherwise, I'll stop sharing. Please feel free to answer the questions. Yeah, thanks, Tommy. Yeah, no, there's no courses like that on the market. There's just not there. I'd love to say there was. It requires years of capability to deliver this type of thing. So I have spent enough of my life building the capability. You guys can leverage off that. I'll just quickly grab the link for you. And yeah, so as with most things, no hard sell. I'm not going to put a clock on you here. I respect my audience a little bit too much to play those games. So guys, anyone who's bought any of this, don't worry. There's an email coming out for you with a special coupon code. If you've bought all three, the bundle, then you just put in your coupon code and you'll be able to get it for free. Those who haven't, feel free to grab the actual. I know I got from. That's actually true. That's actually true. So a lot of times when we do even the onboarding calls, you can see gaps in knowledge and capability, and you say, hey, listen, just go do this. And I would always recommend someone, and then they'll come back to me that it was shit. And so kicking and screaming, because these are quite tough for me, because I actually jump on a call with you guys at 2 a.m. actually. So it's not the easiest thing to do. In fact, it's not even financially worth it for me. I do it because I know once it's done, I'll be able to refer people to it. They're not big money earners for me. But what it does, the reason why I do that, the main reason is, and the self-serving reason is that it allows me to create lifelong customers for LeadsHook actually. Because once you know this stuff, you use LeadsHook for a much longer period. Because we have LeadsHook users who have been on the platform for 5 years now and still killing it. So that is often unheard of in the SaaS game. So anyway, guys, feel free to unmute your mic if there's any extra questions about this or anything I covered today. Please feel free to share or to give me a comment. Hope this was value. Yeah. And if there's anything else I can help you with, guys, just if there's any issues with trying to buy the stuff, just there's an email on the page, courses@leadshook.com. Just awesome. Yeah, thanks, Josh. No, awesome. Thanks, Jason. Appreciate it, man. Now you've been in the game a while, man. So it means a lot when someone like you. Yeah, awesome. Thanks, Goha. All right, guys. With that, we'll call it a night. And if there's any questions or so, feel free to email me. Otherwise, we'll chat soon. Thank you.